JSPL has posted a good set of earnings in Q4. Margins were higher than what the street was anticipating. The international operations have also started delivering in terms of profitability, though the profit after tax was aided by a one-off exceptional. Mr. Ravi Uppal, the MD and CEO of JSPL, joins in now. Good morning, Mr. Uppal, and thanks so much for joining in. First, if you could tell us what was the steel EBITDA per ton adjusted for the pellet sales in the past quarter, and if you could give us a comparable figure of last year as well as of the prior quarter.
Well, you know, the EBITDA on a per ton basis last year in the fourth quarter was about 6,800 rupees, and in the fourth quarter this year we have been able to achieve a level of about 10,000 rupees per ton. So there has been a substantial increase in EBITDA realization on a per ton basis.
What is the targeted FY18 EBITDA per ton for the current year, FY18 that is?
Well, it's going to depend on how the market fares out in future. But if the present, sentiment in steel market, both locally and globally, continues, I have no doubt that we should be able to sustain 10,000. As a matter of fact, once our Angul plant gets going, our cost of production from Angul should be even lower, given the size of the blast furnace that we have installed there. So I think as a minimum, we should be able to maintain about 10,000 rupees per ton, if not improve upon it.
Okay, so if you could just give us some numbers for FY18. What is the targeted steel as well as pellet sales volumes for FY18? And also the pellet, external pellet, if you could give us those two numbers.
Well, as for domestic market is concerned, as against 4.66 million ton, we intend to sell about 6 million ton steel in the domestic, from the domestic production sources. In addition to this, from Oman, where we have a 2 million ton per capacity, we hope to sell about 1.7 million. So this basically means that for company as a whole, on a consolidated basis, we should be aiming to sell between 7.5 to 7.8 million tons.
Sir, can you throw some light on the power business as well? Where is capacity utilization right now, and how do you see that number shaping up?
We have to remember that so far we are utilizing only 1/3 of the total capacity, about 35% PLF. Our total installed capacity is 3,400, which is absolutely ready to go, commissioned, COD issued. All we are waiting for is for the demand to rise. There was a time when we were waiting only for PPAs, but since PPAs were not coming, we have started looking at other options like a bilateral sale. We are also offering a lot more power to the exchange. So basic idea is to see that our capacity utilization improves. So I'm really hoping that in the year 17-18, our capacity utilization should be at least come towards 60%. So which means essentially that we should be running about 2,200 megawatt as opposed to about 1,200 megawatt that we did in the fourth quarter.
Actually, the JPL business has done quite well. The absolute EBITDA went up by 264%, with margins coming in at 44% versus 16%. Were there any one-offs which benefited your power business?
Well, it's not one-off. Basically, we got some PPAs. I think large contributions coming from the fact that we have really been able to reduce our operating costs. We have also, are very selective when we sell power. Especially when we sell to the exchange and other customers, we rather not sell than to sell at very low rate because that doesn't really help. So selective selling, focus on cost of fuel, focus on cost of operations, and reduction of auxiliary power. We have been able to achieve the auxiliary power consumption, which is perhaps the lowest in the industry. So a lot of projects are going on whereby we try to control the cost, because we can't control the selling side, but we surely can influence the cost side, and that's what we are really focused on.
Sir, what have been the average realizations, power realizations for fourth quarter?
Well, the average realization has been ranging between 3 rupees to 3 rupees 20 paisa, about that. So I would say the average is, say, about 310.
Okay. Your international business has started delivering in terms of profitability. Is it sustainable from here on? And if you could give us some guidance on your international operations going ahead.
I think in the year 16, 17, international operations have performed very well. Oman in particular, where they have their EBITDA level has risen by more than 50% compared to the year before. And Oman, our bar mill has come into action. I'm happy to tell you that we have already taken position number 1 in the Oman market, and we are doing likewise in the other neighboring countries like UAE, Kuwait, Qatar, and Saudi Arabia. So the mill capacity is on the increase. Mind you, this performance has come with the rebar mill running only at about 60%. Year which has set in, we will certainly like to take it to 80 to 90%. So the quality of the products that we are offering from Oman factory are considered among the best in the market. There's a lot of pull and demand. We're not only selling within Oman, but we're also selling to other countries in the Arabian Peninsula and North Africa. So that plant will continue to do well. As for Australian Mozambique is concerned, our main focus is right now a ramp up the volume. Now we have been able to achieve a level of about 150,000 tons of ROM from Mozambique mine. All efforts are afoot to make sure that we reach a level of at least 250,000 tons in the next 3 to 4 months' time. Same is the case in Australia. There again, we are waiting for some approvals to come from the Ministry of Mining and Environment there. Once that comes, we would like to increase the volume from the present level of 80 to 90,000 tons a month to double that volume. So 150 to 175, because there's a volume game there. More we produce, more better we do. And for both the coals, whether from Mozambique or Australia, the market is captive. We can bring it here, we can sell to other companies in India.
Sir, of course, another big point of worry for the street is the company's debt levels and the deleveraging plan that you have. So can you give us an outlook on how you'll manage debt in FY18?
Well, the first thing I'd like to sort of clarify here that our company has already built up a lot of capacity in all these segments that we operate, steel and power and others. And we therefore do not intend to initiate any new project. Our prime focus is going to remain on utilizing the capacity. But as far as the new expenditure is concerned, a part of the Angul expansion is still in process. So we reckon that we will invest about 1,200 crores to finish the rest of Angul, and another 700 to 800 crores as a part of the maintenance expenditure. So we will not exceed 2,000 crores in the next year. Previous year, we had spent about 3,500 crores on capital expenditure.
Okay, so we'll leave it at that. Thank you very much for joining in. That is JSPL